When people hear real estate in Asia, most of them think the same thing: risk, complexity, uncertainty. But experienced investors aren't asking whether Asia is risky. They're asking where the risk is misunderstood, because that's usually where the best long-term opportunities are hiding. Global real estate is changing faster than most investors realize. High interest rates, aging populations, and extreme prices are squeezing returns in many Western markets. At the same time, capital is quietly flowing toward Asia, not out of excitement, but out of necessity. The first mistake people make is treating Asia like a single market. Japan, Singapore, Vietnam, and Thailand have completely different rules, risks, and investor profiles. Understanding those differences is what separates smart investors from expensive mistakes. Japan rarely appears in real estate hype cycles, but institutions love it for one reason: predictability. Strong tenant culture, legal clarity, and stable cash flow make Japan a capital preservation market. When investors talk about Southeast Asia, they usually focus on growth: young populations, expanding cities, rising incomes. Countries like Vietnam, Thailand, and Indonesia are going through changes that Europe experienced decades ago: urbanization, infrastructure investment, a growing middle class that wants stability. This is exactly why long-term capital is interested. But growth alone is never enough. Rules always matter more. In Southeast Asia, real estate returns depend less on location and more on regulation. Foreign ownership limits, lease structures, and local partnerships can completely change the risk profile of the same property. This is why smart investors don't chase the highest returns. They choose the clearest legal framework. Singapore is the opposite of Southeast Asia's growth story. It's not cheap, it's not fast, but it offers something global investors value more than speed: legal certainty, political stability, transparent ownership rules. For many investors, Singapore isn't about maximizing returns. It's about protecting wealth while staying exposed to Asia. China reminds investors of an uncomfortable truth: real estate markets don't fail because prices fall. They fail when rules change. For years, Chinese property prices seemed unstoppable, but heavy leverage, government intervention, and oversupply slowly changed the entire system. In Asia, political decisions can reshape markets faster than economic cycles ever could. Foreign investors often assume that demand alone protects prices. China proved that supply, debt, and regulation can override even the strongest demand story. This doesn't mean Asia is dangerous. It means understanding policy is non-negotiable. Asian real estate isn't designed for fast profits. It works best for investors who think in decades, not quarters. Those who value diversification, legal clarity, and patience tend to benefit the most. Smart investors don't ask which country will grow the fastest next year. They ask which markets will still function well through economic cycles, political changes, and global shocks. In Asia, long-term success comes from balance, not from chasing the most exciting story. A well-structured Asian real estate strategy rarely focuses on just one country. Some markets provide stability, others provide growth. Each plays a different role. The goal is not perfection, the goal is resilience. Japan offers income stability and legal clarity. Southeast Asia offers long-term growth if you respect local rules. Singapore connects everything, protecting capital while keeping exposure to Asia. The biggest advantage in Asian real estate isn't timing the market. It's patience and the discipline to stay invested when headlines turn negative. Most investors fail not because they chose the wrong market, but because they didn't stay long enough. Asian real estate isn't about shortcuts. It's about understanding how different markets work together over time. Which Asian country would you personally invest in, and why? Let me know in the comments and subscribe for deeper breakdowns.